Welcome back to the Malaysian Money Matters show. It's the 26th of September, 25. Today, we're doing a deep dive into how some key Malaysian companies are handling risks, how they're dealing with global trade stuff, and also what's happening with policy changes right here at home. Got a lot to cover, so let's jump straight in.
Okay, let's start with corporate governance. Big news for PPB Group. The Indonesian Supreme Court just overturned an acquittal for their associate, Wilmar International. This relates to that graft case, the one about cooking oil export permits.
Right, I remember hearing about that. So what's the financial hit look like for PPB?
Well, potentially quite large. There's a security deposit involved that could be forfeited. We're talking potentially up to RM 600 million exposure for PPB Group.
Wow, RM 600 million. Have they set aside funds for that?
Not yet, no. Management is saying they're confident, so no provisions made. But, it's definitely a major risk factor for Malaysian companies operating over there, especially when it's unprovisioned like this.
Okay, something to watch. What else on the governance front?
Well, staying domestic, Bermaz Auto's board rejected a proposal from the Pangolin Asia Fund. The fund wanted independent directors to get at least half their fees and shares bought from the market.
Yeah. Trying to tie director pay more closely to how the company actually performs long term. So the board pushing back. That signals pretty strong resistance to shareholders getting involved in director compensation structures.
Exactly. Now, shifting gears a bit to earnings and how companies are managing transitions, let's talk Yinson Holdings.
Okay, Yinson, what's their story?
Their second quarter profit got cut in half, down to RM 111 million. Main reasons seem to be weaker results from their EPCIC segment. That's the engineering, procurement, construction, installation, and commissioning side, plus higher finance costs.
So it's the cost of shifting focus.
Pretty much. It shows they're in that tricky phase, moving away from the really capital-heavy construction part towards the more stable, long-term operational side. They seem optimistic, though, citing long-term contracts.
Okay, that makes sense. And sticking with tough results, Astro Malaysia Holdings.
Oof, yeah. A rough quarter for them, too. Q2 profit plunged, down 70%.
70%? That's huge. Both subscriptions and advertising revenue fell.
Both down sharply. It's the ongoing struggle for legacy media, isn't it?
It really is. Any bright spots?
Well, a small one. They actually saw their first positive pay TV net customer addition since way back in 2018. That was in August. So maybe cost control is helping a bit, but still, it just highlights how incredibly tough that whole media environment is right now.
Definitely. Okay, let's look at market activity. Any interesting signals there?
Yeah, a couple things. Investor appetite for infrastructure seems really strong. Cheating Holdings, they do utilities engineering.
Yeah.
Ahead of their ACE market listing, the public portion was massively oversubscribed.
Over 40 times.
40 times shows real enthusiasm for that sector.
It does. And on the growth front, RHB Research is projecting pretty solid earnings growth for farm price holdings, like 33% from fiscal year 2026.
What's driving that? Mainly two things. A new distribution center down in Johor, and a really ambitious plan to significantly boost their revenue coming from Singapore.
Interesting strategy.
And one more, F&N, Fraser Neef Holdings. They're looking to sell off a half stake in a peddling Jaya property for about RM 180 million.
Unlocking value from property.
Exactly. Looks like a clear move to monetize assets that aren't core to their main business, freeing up capital, probably to focus more on growing their dairy farm operations.
Makes sense. Okay, let's pivot to the international scene. Trade talks seem front and center.
They do. Malaysia and the U.S. are apparently pushing hard to wrap up tariff talks before President Trump visits for the Asian summit in October.
Yeah, getting that deal done feels critical. Those U.S. reciprocal tariffs, what were they, like 19% on some Malaysian goods?
That's right. And they've already played a part in Malaysian exports to the U.S. dropping, 16.7%?
Yeah, significant drop. We really need those tariffs sorted. What about Europe?
Similar story, kinda. There's a push from the EU trade chief for deeper economic ties between the EU and Asia. That's happening just as the Malaysia-EU FTA talks are set to restart in November.
So opportunity there with the FTA.
Yes, but there's friction too. The Malaysian Palm Oil Council is still raising big questions about the EU's deforestation regulation, the EUDR. Even though Malaysia's shown success in cutting primary forest loss down 57%, documented were still classified as standard risk. And that's definitely a sticking point for trade and complicates those FTA talks.
Right, that EUDR issue isn't going away. Okay, back home. Any major regulatory or legal updates?
Well, the SRC civil trial is ongoing.
Yeah.
Counsel for SRC International made the point that former PM Najib Razak couldn't just claim he was too busy to micromanage.
What was their argument?
Essentially, the SRC wasn't just some ordinary company. It was a major national project involving RM4 billion from pension funds. So the argument is accountability has to go right to the top.
Mm-hmm. High stakes. And anything on the health policy side?
Yes, a big one potentially. The Ministry of Health is aiming to ban the sale of vapes, possibly as early as mid-2026.
A full ban. Wow.
It seems like a phased approach, targeting drug and addiction issues. And interestingly, they're coupling this with a plan to expand the SARA appreciation aid. The idea is to include healthier food items like fruits and vegetables in the aid package, sort of using aid to gently encourage better eating habits.
Okay, so a health push on two fronts there, vaping and nutrition. So pulling this all together, what does it signal for you, the listener? Well, you see this push for stability in trade, trying to nail down deals with the US and EU. But at the same time, domestically, there's a real tightening happening. Companies like F&N are shedding non-core assets to focus capital, farm prices doubling down on growth areas, and the government's getting tougher on regulation, whether it's demanding accountability, like in the SRC case, or taking strong action like the planned vape ban. It feels like a general trend across the board, a sharper focus on core priorities, both for businesses and the nation, in what's clearly a challenging global and domestic picture. If you want to stay well-informed on these critical movements, be sure to subscribe to the Malaysia Money Matters podcast.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.